When it comes to trading, you often hear people talking about something called MT4, but what is it? MT4 is short for MetaTrader 4, or one of the world's most popular trading platforms for Forex trading. In fact, you can trade for a lot of things there, including indices like SP 500, Nasdaq, in shares CFDs like Apple, Netflix, Tesla, and Amazon, in commodities such as soy and coffee, in precious metals such as gold, silver, platinum, and copper, in cryptocurrencies like BTC USD, ETH USD. MT4 has all the features you would expect from a modern trading platform: a large number of commodities, symbols, a wide variety of charting and configuration options, user entry options, comprehensive historical tracking, legitimate business, and even tools. Backtest, so you can test to see how different trading strategies would have done against historical data. It is extremely intuitive and easy to use. Once you know the basics of MT4, you'll want to dig a little deeper into its technical features and trading robots, known in the industry as expert advisors. Many marketers like to use its popular coding language, MetaQuotes language, to create their own custom applications and programs to bring to market. This in turn has created a booming market where you can buy automated trading programs, programmed with specific strategies, that will help you make your trades for you. Now that you have a basic understanding of what MT4 is, let's dive into a little more detail on how to place trades on MT4. But before going further, let's remember one important point: you buy when you expect the price to rise and you sell when you expect the price to fall. Is it understood? Okay, let's move on. With MT4 there are 6 ways to buy and sell. We'll take a look at each of them, including the best time to use them. Buy at market. This is useful when you expect prices to rise straight away from the time when you enter the trade. This trade type will immediately execute a buy entry at the current market price. Buy limit. This is useful when you expect prices to drop to a certain level, usually a key support level, before bouncing up. You would place this order type below the current market price. This method is particularly useful for reversal strategies. Buy stop. This is useful when you expect prices to rise to a certain level, and only when it breaks a key resistance above current price would it continue to rise further. It is particularly useful for breakout strategies. You would place this order above the current price. Sell at market. This is useful when you expect prices to fall right away from the point where you enter a trade. It immediately executes a sell entry at the current market price. Sell limit. This order type is useful if you expect prices to rise to a certain level, usually a key resistance level, and reverse from there. It is particularly useful for reversal strategies. You would place this order above the current market price. Sell stop. This order type is useful if you expect prices to fall to a certain level, usually a key support level, and once it breaks that level would trigger a bigger move down. It is particularly useful for breakout strategies. You would place this order below the current market price. Thank you for watching us. Please subscribe us to learn more about Forex trading and join us on Telegram to get free Forex signals.